So the price of oil has increased after Israel has declared war on Palestine. What's happening there and what could the possible responses be? And then we're going to focus on whether there's a reversal in store for the US dollar. You know, the market has been very heavily bullish over the last couple of months, so let's have a look there. And then the trading takeout today is learn to get rid of your biases, and it's very closely related to the first story that we are going to look at today. Now, the only way you can get the best trading insights, education, and analysis each day is if you're here every day. So hit subscribe so you can get your daily trading edge. So yes, it's been quite a sobering series of events over the weekend. You know, it seems like there's been a real escalation of the, multi-decade Israel-Palestine conflict. And yeah, it looks troubling, and the one thing about markets is that they don't rest. They don't really care about your opinions. They don't really care about anything that is, I guess, subjective. You know, they don't care about whose side you're on and things like that. They just exist. People still need oil, which is what we're going to talk about today. And it makes things difficult sometimes, I find. I'm speaking personally here. When, something relatively tragic occurs and then you have to try and find rationality and to go back to what you're used to during times when it's relatively peaceful, So times like this are tricky. I've been through quite a few of them. Syria was one of them. Ukraine, obviously. And a couple of others, I think. The one that is also very notable was when the Iranian general was killed via a missile strike. And it had a similar reaction on oil here. Oil ticked up. That was a couple of years ago now. But yeah, I think it's a troubling time, but markets do go on. And so we got to look at oil here because of the region. It's in the Middle East. And it opened up it opened up actually a little bit lower than $3. It was about $2.50 that it opened up higher. Currently trading about $3 higher. And it's quite interesting, really, because I'd have actually expected it to trade, way higher, quicker. I think what we're seeing here is just the initial reaction to the conflict starting. We've seen the tick up, and then what we're probably going to see is as more information develops, if it does look like, other countries are getting involved, we'll probably see a similar reaction to what happened with the Ukraine invasion, which was here. We'll start ticking up above. That's actually wrong. It needs to be this. We'll start ticking up above, $100, and then higher. Very likely these could be tested. And it's one of those things where it's tricky because obviously all eyes in the oil market are going to be on Saudi here. What Saudi do? Saudi have put their support out, ironically, for Israel, I believe. They need to build up relations with the US. But I don't think, sorry, let me rephrase that. I don't think they've put out support for Israel. What they've done is they have said that any form of terrorism they're against, which if you read between the lines, that is effectively, anti-Hamas, pro-Israel. And these things are important. You do have to delve into politics with markets because you have to understand the positioning and what might come next. So you've got a couple of key allies in that region there from a US perspective. And naturally, the big sort of proxy is Iran versus the West, if you like. Khamenei, the Iranian Ayatollah or leader, I can't remember what he's called there, he's put out a series of videos over the weekend referencing, death to America and things like that. So you can start to imagine this is a little bit, we're getting into proxy war territory here, which in the grand scheme of the oil market means that there is probably going to be more constrained output. There will be issues to do with perhaps supply. So these are the things that we have to start factoring in. But right now, it's too early to say. We've seen the initial reaction. It's obviously going to be bullish oil because it seems like there's a supply cut possible in the future. There's nothing confirmed. There's no change in supply, but that is just how things react when there's geopolitical instability in the Middle East. I think you can tell this morning I'm a little bit deflated from it. It's been very, very tiring and just not nice to see and to start the week with. Obviously, it's terrible for the people there, but it is exhausting seeing stuff like this in the markets. But, you know, in terms of a broader perspective, we need more information about the market. I think if oil were to rally, the dollar would have to sell off a tiny bit just to make up sort of some sort of balance there. The dollar's still quite bullish. But yeah, it's definitely one that we should pay attention to, and I think will be mentioned a lot over the coming weeks. So in front of me, I've got the Aussie dollar versus the US dollar, and I wanted to sort of express what I'm thinking here through this pair because it makes the most sense. Now, I've also got, let me just grab this and shove it onto a chart. I also have a massive broker's client sentiment. And this is something that I tend to look at just to form a bit of a view, to form a bit of, you know, how things are positioned. Now, it's saying that 77% of clients are long on this market. Would you want to be long on a currency pair that is very, very sensitive to risk after the weekend that we've just had, and also with the fact that the dollar has been in a very, very strong bull market for a very long time now, since, you know, the start of 2023, in this currency pair, that is. You can see that here. While 77% are long the market. And you have to remember that this is uninformed flow. So this is a large retail broker. 77% of their clients are long the market. This is also while interest rates and yields are increasing and, you know, remaining higher for longer. I don't really like the odds there. So to answer my question, no, I don't think the dollar's in for a reversal anytime soon. Now, perhaps things can change over the next couple of weeks. And if we're looking at Aussie dollar, I think this low is quite a key one. You know, it is the 2022 low. And I think we're gunning for that. So we're about 200 ticks away from there, about 180 ticks away from there. I think the current geopolitical instabilities is sufficient to cause a move down to those levels. Now, the one thing to be watching out for when we do get there is, of course, okay, so we're there now, but there's all this no man's land to the next low. One of my favorite phrases is, if it's traded there once, it will trade there again, which is terrifying if you consider the 2020 low in Aussie dollar. So I think what happens is that we get down to here and we meander for a little while. And then we have to think of the scenarios to cause the market to actually get down here. Like, what would that be? And for me, it would probably be a complete implosion of the Aussie housing market. It's already very overheated, but you'd need to really start seeing some serious debris there to start thinking that the Aussie dollar is going to get down there. You'd also need the dollar to get even more strength, which it definitely could, based on the view that I think I mentioned last week, that the euro could head to 0.85, which is, you know, quite far away from current price. It's about 20,000 ticks, I think. So it's very, very far away. 20,000? No, it might be 2,000. Can't remember. But it's quite far away. And based on current structure and the structure of the Eurozone, it looks like it could get down to there. And that is where the euro was introduced in 2002. So that is the price at which the euro came about at, which again signifies the strength or the success, I guess, of the Eurozone, which, if it's not clear, isn't very, considering Germany has just seen the AfD, Alternative for Deutschland, rise to the second strongest party in Bayern, so Bavaria, and another state, which I can't remember now. But yeah, some real troubling things going on in Germany as well. I think I'll cover those tomorrow. But in terms of dollar reversal, there's not one coming. Sorry, I had to put it into the title, but there's not one coming. I think with the current issues, the geopolitical issues, and also US yields still ticking up, we're not going to see that for a while. Aussie dollar, we might see it down here, but I think, you know, it's bearish traffic for me across all of them. I'm actually long dollar yen as well at the moment from 148.84. So we're about 20 ticks up there, 25 ticks up currently. It's trading 19 at the moment, I believe. And so yeah, we're still very much bullish the dollar. Just doesn't seem like a reversal's in sight of the structural issues globally. So yeah, that's your dollar update. I guess feel free to have your own view. That's just mine. It's not financial advice. It's just probabilities. So today's Trading Takeout is based on, leaving your biases at the door when it comes to trading and investing. I have opinions over certain things, but I realize that those opinions don't necessarily translate into anything actionable, and sometimes they just cloud judgment. When severe events occur, such as conflict, you tend to get two different sides, and I think it's important. And I always have to remind myself of this because I fall into the trap. I always have to remember that if I actually want to have a signal, I have to get rid of my opinions completely on whether I think something's moralistically good or bad. I just have to see it very, very black and white and then separate what's important. I can now do this in a split second when I have to think about it, but I have to urge myself to think about it. It doesn't just come naturally. I can get, very much down the path of just thinking about moralistic things and opinions, but that doesn't work in trading. It doesn't work. The market does not care about your opinion. The market just is. Okay. And so if you can train yourself to really, really start, switching on cue, thinking, okay, this person said this person said that, I'm not going to get wound up. I just got to focus on what matters right now, this second, then that will be very much at your, I guess, it's a bonus whenever it comes to geopolitical instability. It will very much serve you in the right